Hello traders, it's Samurai Trader here. Welcome to this session. We're going to be looking at a number of live trades I've taken on the micro NQ, and as I call them, the easy money trades, and you'll see why very soon. Now normally I'm trading the ES. However, we've seen this massive increase in volume on the micro NQ, and more members have been asking me about the best way to trade it. So I'm going to be showing you some live trades I've undertaken and explaining those step by step. So normally I'm on the ES, but today we're doing the micro NQ. As always, there is a risk in trading. Please don't trade with money you can't afford to lose. Stay on the simulator until you're consistently profitable. If you haven't already requested my ebook, please go to the description link below. Make sure you like my YouTube video. Please give me a big thumbs up. It keeps me motivated to keep going. As well as that, a very quick advertisement. If you like what you see, for $297 you get all of my indicators. If you've got a platform perhaps I don't have indicators for, I'll give you all of my settings. There are literally hundreds of hours of recorded sessions. I also run a live trading room, and I run coaching sessions. So each week I've got a live trading room 3 days a week for 2-hour sessions, and the coaching, and that's where you get to look over my shoulder as I teach you step by step. So $297, nearly finished the ad by the way. $297, you get everything you see, plus 1 month to my coaching sessions and 1 month to my live trading room. Look, anyone can read how to swim out of a book or play the piano by watching a video, but or so they think, but we know that's not the reality. And the same thing when it comes to trading, as you're about to see. So you can click on the link below. $297, once only payment. You're not signing up for anything else, and you get a free month to my coaching sessions and my live trading room. Let's now move on. Okay, I'm going to turn the camera off here, and I'm going to turn this little light off to try to brighten my face up a little. And most of my trading I'd classify as scalping, and that is scalping. We want to be in and out, usually sometimes seconds, but usually within minutes. It's also, in my opinion, a lower risk type of trading, and the reason being we have much smaller stop losses. Now, as I mentioned in today's session, we're going to be looking very closely at how I trade the micro NQ and how you can trade it. And look, there's just many benefits, as you'll see in a moment, but particularly the wide swings we get, and it's only 50 cents a tick. So anyone can really start trading it with literally $500 or $600. Now I know your broker will say you only need $100, but that's not the reality. And the reason being, you might have a stop loss of say 20 ticks on the micro. That is here down here for NASDAQ, that would be $10. Okay, so we never ever risk more than 2%. Traders, look, you may not agree with some of the things I'm about to tell you, but I've been trading now for 28 years. My job is to keep you in the business. We are ultimately money managers. Now we've got micro contracts now on gold, on oil, the ES, the Russell, the Dow, and of course the NASDAQ. And if I look at all of these, the one with the greatest volatility and the greatest volume by far is the micro NASDAQ. Now very quickly, I love what the late Stephen Covey said in one of the 7 habits. One of the 7 habits was begin with the end in mind. And what he meant by that, to begin with the end in mind, means to start with a clear understanding of your destination, where you're going to go. So then you can start to plan the steps that you need to take. Now I'm going to put you on the right track today with the right advice. I'm not going to be giving you any of these BS stories about how you can get these massive returns within a month or two. That's just not true, but I'll show you how within a year you can be doing that. Now this is from 2 days ago. It's now in my top part of the world Wednesday evening, and this was taken on Monday. And the reason that's important, traders, that's at 10:56. I just want to show you the volume on the NQ 50,000. Look at the ES up here, 54,000. The micro ES 95, but look at the micro NASDAQ 416,000. So what we're seeing, traders, is this massive volume flowing into the NASDAQ, and the reason being the volatility, let me get that out right, put my teeth back in. It allows us to have a much larger stop loss. Now in the coaching session today, you can see the date there, question 21. Now, this is a comment from Roman, who's been a member for years of mine. He said in the session we were discussing trading the 16 tick, which is what we're going to be looking at. But he said, I just wanted to chime in on the micro NQ, the 30 tick. It's a great thing to trade at that time. One can easily target 250 a day on a micro. Now traders, that's about a 10% return per day based upon the return on capital we average on all markets. This is an outstanding rate of return. Now here he's got here much better than the 16 tick. Now the 16 tick we can trade during the Globex session, which is what I'm in now. Now I've actually got the London Open in 2 minutes, by the way, so it's nearly 2 a.m. Central Standard Time. So the reason I also brought that up, the time frames I trade are all subject to the volatility in the market. Okay, very important. Okay, so if we want to trade this properly and to get wealthy and stay in the business long term, you would need a $1,400 account to trade the micro NQ this way. Now you can start with a lot less by having a lower time frame. However, of recent months, unless you're trading a higher time frame, you're going to be whipsawed. Okay, whipped out. Now here, if we went for a 5% return per day within 14 weeks, there's your 5 grand a week income, potentially 17 weeks, nearly 12,000, and your capital's 53. Now what's our plan of action for members watching this? We'd be trading 34 Bs and 2 Bs. Now to hit that target, you only need 4 5-step trades, which you'll see what that is very soon, or 3 7-step trades. These are very high probability. Let's step it up to 100 a day, which is what my target is, and you'll see I achieve that usually within half an hour to an hour. Here, that's a 7% return on your capital within 11 weeks. There's your potential of 10,000 a week, your capital. How do you do that? 6 scalps, 4 slightly larger moves. Now down here we can see different all of these tools are provided, and I teach you how to basically put together your trading plan and how we achieve these. So if we went for 4 7-step scalps a day, that's $100. You can see within 12 weeks you'd be trading 35 contracts. So I'm trading 20 and without no problems at all. Okay, even during the Globex session. Now what you may do over time is, of course, is increase your target from 100, as I'm about to show you, 150 in a moment. But this is a reality. Now if you're not familiar with my compound sheets, how it works is you only start trading an additional contract each time you double your money. Start with 1400. Once you get to 28, start trading the second one. Once you get to what's that, 4200, whatever it works out to be, you start trading your third contract. Okay, so we're using the market's money. And last of all, here, if you go for, once again, 150 a day, you need 7 scalps or 6 7-step trades a day, and wait till you see how many we get set up. And look where you are in 7 weeks. Within 7 weeks you got the potential, I got to say potential, 10 grand a week, and look where you are in 9 weeks, 30,000 a week. And remember, you're using the market's money. Now how? Before you screw your nose up and said, oh yeah, it's easy to say, wait till you see the charts and how I trade them. but the big thing is when the Y is big enough, the how will appear. So we need to get between 6 and 7 net trades after any losses. Now if you're a new trader, the first thing you want to be doing is trading in the direction of a higher time frame. So you'll also see I take counter trend trades and T3s, but I've been trading 28 years. What I say, when the reason I say that, I recommend if you're a new trader or if you're not profitable yet, you trade in the direction of the trend only. You don't trade divergence or reversals. If you are an experienced trader, your best reversals will come off pivots, as you'll probably see. Now this is the session we're going to be reviewing today. It's live recorded, so I'm going to play it back. So this is Monday, just there, so we can see it's at 2300. And note this here, it had a trade 1 up here, and then I had Brinko tails trade 2. Now I want you to notice here, follow the gold, see the gold major EMA. I then took this trade and I had a loss. For new traders, I make it really simple. That is, see the orange cloud, see the blue cloud. You trade in the direction of those colors. It'll keep you on the right side of a ledger. Now when we start to get some divergence trades and deeper pullbacks, okay, we're going to be going against the trend. But initially, for an example, this loss I just had here, I was selling that as a major EMA bounce and I got stopped immediately. I also had the cloud against me and the long term was against me. We then have a look at then the end of a trading session. I had a trade 5 there. I then took trade 6 was a double T3. Now that's a reversion to the mean trade. So there we're up 2300, and that was in an hour or so, I think. Well, actually, let's check that out. That was 22.25. Gee, not even that. It was in that was in 25 minutes. Okay, now look at these potential with trend trades as well. See the white arrows and see the white paint bars. This is not rocket science, traders. Now then we go to today, so that's Monday. Tuesday we just roll over into Wednesday, we're just after midnight. And so here I had oh no, that was the I know what this one was. Sorry, this is after those trades, and I was just talking to the members about how would you avoid these trades after that. But this is the one I wanted to show you. So this is today's trading, 4 from 4. Now I had a plain vanilla entry there. There would have been one there, is just plain vanilla, had one there, 2. I then took this T10 and then I had a plain vanilla entry here. There's another beautiful entry there and a couple thereafter. So I've recorded all of these, but what we'll do, let's just go and look at this recording and this potential trade you could have taken. So let me pause this and I'll pull up the recording. Now as I pull the recording up, I just want to pull this back for you. So this is the ES16 tick. Now we've got some very strict rules. All of my trades are all based upon patterns and they're rules based, so it makes trading so much easier. But this is just after midnight, so I just wanted to go back here and show you the trades of the day I took. Gee whiz, that was back a bit further than what I thought. Where are we? Sorry everyone, let me just find that just a sec. Here we go. No wonder I was confused. I was running some classes today and we were just marking up potential trades. Okay, just after midnight, here is our first trade. Now what's really important here for today, actually I'm going to go back to the other record. I was about to walk you through step by step exactly how I picked these, but this is the 4 from 4 today. Nothing spectacular about these entries. These are all just plain vanilla trade entries that we take every day, and when I finished there we then had multiple entries after that. So let me play back the recording. By the way, traders, my videos are raw, real and unedited. All right, so what is a really sensible target? $100 a day on this market. Now you only need $1,400 and $100, that gives you about, what was that, about a 7% net return per day. And to achieve this, all I need is 4 7-step trades. Now what are 7 steps? I call these steps. Now it doesn't matter on which time frame you're trading, whether it be a 20 tick where each step then is worth 10 ticks. See that says there 16.8. What that means is each step thereafter is worth 8 ticks or $4. Now remembering, traders, here we have a massive volume on this market, so I'm executing 20 trades or 20 ticks, sorry, 20 contracts. Dear me, let me get it out right. 20 contracts at a time here. Now my entries are very mechanical, so are my targets. Where you'll see me go for larger targets, traders, is if I've got a major support resistance area or a major pivot in front of me, whatever. Now up here I've taken this, my stop is a maximum of 56 ticks. Now on the big NQ contract, that would be $280, and then we'd be after $1,000 a day per contract. Now here we're coming down, and now I'm filled trade number 1. Now generally with these, as a minimum, I'd be after 7 steps. That means I've got a 1-to-1 risk reward. If I can have got a major area of support or resistance, and that's how fast this is going, by the way, I'll then maybe increase my target, but I also may decrease my target. That is, if I feel that I'm going to bounce off the pivot, or I'm very close to a major support resistance level, I'll either cover or I'll get to break even and hope I then get through that level. I paused the video there. I wasn't going to do anything here, but then I had all of these Renko tails set up. Now what are Renko tails? See those little black tails on those candles? They're actually a trend continuation signal. Now I had a Renko tail up here. I was considering taking that. I decided against it because of a couple of major EMAs. So now I'm short on, and I've got here a set target, a fixed stop. Now just note here, I've gone to break even. Now I've pulled it back, and the reason for that is this. Now number 1, a stop is there for a reason. We never pull our stops or make them larger than our trading plan or the time frame allowance that we allow for. So on each time frame I have a set stop loss that I use. Okay, so it usually gives us plenty of room. It's usually above or below a swing. Sometimes you'll see me do this where I'll go to break even automatically in my DOM, but I'll pull it back if I think I'm going to get a bit of a retracement, because what can happen is we go to break even, it pulls back, and then it continues. And I think this might have even been one here. Now I would have locked in 2 steps, okay, just there, which is you can see there I've now locked that in, and that tail would have stopped me out if I'd have gone to break even. So break even means my entry price. So remember there, I'm after 56 ticks. Now this is called I've already mentioned a Renko tail. Now I can't scroll, now I just scroll down. Down there we've got the low of day. Now there's no guarantee we'll get down there, but just note when we've got the low of day, we love to go down and kiss those levels. So you can see here we bounce not too far below there, and this is what we call a T3 entry. It's a reversion to the mean. Oops, that's something, I just pushed the wrong button there on the screen. So now I'm retracing. That was trade number 2. So I'm pulling back here. Now I'm about to have a change, and just there, see that white dot? That tells me that I've now got a change in the color of, and let me pause that right there. and what I must have done is pause the video, entered that, because what we can see right there, I got stopped on that trade. So as I was pulling up, I went short and I got stopped immediately. Now what I've done now, I've now gone long again here and here. I've added to my position. Now, very important, traders, when will I add to a trading position? Usually if I'm already in the green on the chart, I'll add, or if it's early in the trend. But there's also now notice here I'm increasing my targets somewhat, but also there's something which is very, very important. I only trade with a 1% risk parameter. So that allows me to add to a position and still never have any more than 2% exposure. Traders, I can't emphasize enough money management to you. And what I mean by that is if you've already in a position and you're 2% in the money already, don't add to the trade, okay, unless you're a very, very experienced and profitable trader. So we then rallied up. I entered here, had a retracement. My 56 tick sounds a lot, doesn't it? But it's not really on the NQ. I've entered that trade. Oh no, I got out of that trade. Sorry, I even totally missed that. Now, why was I out of that trade? It went to break even. Okay, I missed that. Sorry about that. So that's that break even trade I'll refer to. Traders, when you're a scalper and day trader, and let me pause that there, something I want to show you here. I can't remember trades from 2 or 3 days ago, just because we might take 10-15 trades in a day. And in my case, running a trading room and coaching room, we're looking at trades there as well. I lose track. Now up here, see that horizontal line? That horizontal line, traders, is the swing high of my last major swing high. And the reason that's there is that we love to go back up and test our highs and lows of day. Now this is where quite often we will get a bounce off that level and maybe another push. But also if you want to increase your target, now's the ideal time to do that. Now what I want you to notice is, and unfortunately we're not looking at the anchor chart here, but my EMAs are in an uptrend. I'm overbought just here. Now with that loss here, and I drive this home to traders every day, technically it's against the trend. It's against the cloud. The easy thing initially is to trade in the direction of the cloud. Now I'll just move this along. Now that would have been another separate entry just there. Now I just also pointed out again the high of day. Okay, so I'm long 20. Okay, get up there for me. Okay, so now I've hit that, and see that high there. We've missed it thus far. Do we get up there? Yes, we do. After a period of time, traders, there are a couple of key things you'll really start to believe in: pivots, swing highs and swing lows, and trending EMAs. Once you master those, you're set for life, providing of course you apply the rules behind this. So you can see at the moment a little bit of potential resistance up there at that swing high. Okay, now we punch through and I've gone short. Why have I gone short up here? I think this is going to be what we call a double T3. Now a T3, I've never seen it written about anywhere. And see that black line, nor that one. And once you understand what it is, right, gee, that makes sense. So I've got a double T3 here. Now with the T3 reversal, we don't have to have any divergence for the reversal. Now do we still have losses? Of course we do. But if we have a double T3, and there it is there, T3/2. This becomes a loaded trade. Now note my stop is 1 or 2 ticks above the swing. Note how we rallied up and nearly tested that high. So I have my swings or my stop loss at various places based upon experience. That is, I know there's a very good chance I'm either going to get stopped there and run to the high, or we'll form, and that's what I call a T10, by the way. So here we're just waiting to get filled. Now usually I'd have that target down here at the 89, okay, down there, but the reason I've exiting there is I would have hit my, that means I've hit my daily target. So what you'll actually see me do, and there's the bounce, by the way, there it is right there. So it would have been another entry, and there, then you had another reversal just there. Let's just quickly go and check out what's happening on the market right now. So you had a setup right there. What about that one? Was that a setup? Let me pull this back there. Nope, no setup there. Yes, yes, and yes. See what we're doing, we're looking for our retracements and trading back in the direction of the higher time frame. Now I'm really making it simplistic, because I think it was Richard Branson said any fool can make something look complicated. Now but see here, you've got the cloud on your higher time frame. See that there? I'm looking for trades in that section. I'm looking for trades, if any, qualify under, and I'm looking for trades above just there. Traders, you've seen the potential, and this is the true potential of the micro NQ. Now what if you don't have $1,400 right now? Well, you can start on the micro ES. You can start on another market where you don't have the volatility. The other option, of course, and we've got many members, are with prop firms, trading with prop firms. So there you're using their capital, and for many traders, trading with a prop firm is a great alternative, because it also really helps with the discipline. So traders, all we need there is 6-7 tick, sorry, not in this case, step trades. If I'm trading the micro, and let's just see, by the way, what's happening with the I'll just show you this. It's the anchor chart, just show you the ES right there. So this is the ES. Now there's still been some really nice waves here. Okay, so you can see I've had some nice waves, some nice EMA bounces. Now once again, these are very rules based when you would take these, and a big thing is we're always looking over at our anchor chart. Traders, come and join me, come and let me teach you how to trade these. As I mentioned, for a limited time, and I've never offered the live trading room as well as part of the deal. So you can actually get 12 2-hour sessions in that. So what they are recorded. You do have lifetime access to those. All of my indicators, as I said, if you've got trading platform, like I've really only got most of my indicators for NinjaTrader and TradeStation. However, for TradingView and others, I've got members have provided some of the work they've done and provided the indicators. So either way, you get the settings, so you can easily model what I do. So traders, this is Trading the Micro NQ. I'm excited for my members, I really am, because lower capital requirement and fantastic volatility. Okay traders, see you in our next video.